Welcome back to Yahoo Finance Live. I'm Julia La Roche, and I'm pleased to bring in our next guest, Starbucks CEO Kevin Johnson, fresh off the coffee chain's record fiscal third quarter results. Kevin, always great to have you on the program. And I was just mentioning a record quarter for you all, hitting $7.5 billion in revenue during the quarter for the first time. And certainly I was sensing quite a bit of optimism for you as it relates to not just that you all have recovered, but that you see this tailwind, this multi-year tailwind in the years ahead. Where are you getting the confidence from?
Well, Julia, good morning, and thanks for having me on the show this morning. Look, this was a record quarter on just about every dimension. You pointed out we beat revenue consensus and posted a $7.5 billion quarter. We beat a significant beat on earnings per share. And if you look across our major businesses, our U.S. business, 2-year growth is 16%, 2-year growth. So we're growing over fiscal year 19 at 16%. In China, that 2-year growth is 23%. So you look at it on every dimension. We're growing. Customers are back in our stores, and so that's what's given me great optimism. The new stores we're building in China are performing better than prior generations. Our comp is accelerating and growing in the U.S. and China. And our channels business has put us in the #1 share position in ready to drink and packaged coffee. So you put all of that together, and it just says that, as we come out of this pandemic, we have further differentiated the Starbucks experience relative to other alternatives. And I think the combination of this large and growing addressable market for coffee, the continued shift to Arabica coffee, and the Starbucks differentiation gives us a multi-year tailwind. And I think we're seeing that unfold.
So many things I want to dig in with you. Kind of speaking of trends, one that was really surprising to many folks, Kevin, 74% of your total beverage sales are coming from the cold beverage platform. Is that something that you had ever envisioned or expected? And what is kind of driving that?
Well, Julia, I think it was probably a little over 4 years ago at our investor conference. We made the comment that we thought, going forward, that we would soon see over 50% of our beverages be cold beverages. And what's driving it is innovation in our beverage platform. Starting with cold brew and the nitro cold brew, and now our ice shake and espresso beverages and our refreshers. So these are all coffee-based cold beverages. And I tell you, customers love them, and especially the millennial and the Gen Z, cohorts. They really enjoy those cold beverages, and so that is really a big part of what's driving growth in terms of the platform. Is the fact that we have these personal, handcrafted beverages, both hot and cold, that customers love.
Yeah, probably the fact that you all are able to customize them at that level. Another area, of course, of growth has been the alternative milks. I think you said accounting for 25%. Just really quickly on the alternatives, because a lot of folks will want an update. What is going on with the oat milk situation and the partnership with Oatly?
Well, we've been on this journey to give customers choice when they look at the milks in their beverages. And we've expanded a number of alternative milks: soy, coconut, almond milk, and with oat milk in our partnership with Oatly, significant customer demand for that oat milk. In fact, we've added some other suppliers, and Oatly, I've been working with their CEO. They're building an entire manufacturing plant in Utah just to keep up with the demand at Starbucks. And so, we're optimistic that, we're getting the supply side of the equation in order, because the demand is going to be very strong going forward. And that's good, because it's not only good for the planet, but it's also good to be able to serve those customers who prefer those alternative milks.
Mm-hmm. And I do also want to bring up digital with you. More than 24 million active members, which you said represents 51% of the total spend here in the U.S. Kevin, help us contextualize that, why it's so critical, that digital ecosystem, and where you want to see that go. How do you kind of think about the growth there, the addressable market, and how valuable those customers are compared to folks who are the non-rewards customers?
Yeah, I think the first thing to realize is that the two transformative elements of modern day retail are, number one, creating a great experience in your brick and mortar store so that it's a destination for the consumer, and then extend that experience with digital mobile relationships. And that's exactly what we're doing. In fact, as we started this fiscal year, we had 19 million active rewards members. This is 90-day actives. We've grown that now to over 24 million. And when customers join the rewards program, it increases their engagement, their frequency, and their spend. And it also allows us to have a more personalized relationship with them. And this is where our technology like Deep Brew personalizes the suggestions and the recommendations and even the offers that we make to those customers. So it really strengthens the loyalty and the relationship between Starbucks and our customers. And so, we said earlier this year, we had this vision that we could double the number of active rewards members in the US over the next few years. And you see, we've already gone from 19 million to over 24 million. And candidly, China's seeing the same thing, Julia. We went to over 17 million active rewards members in China. And that was nearly double where we were a year ago. So significant growth in the digital customer relationships.
I know there's so much to discuss. Another key topic, inflation, the inflationary pressures you all are seeing. Where are you seeing those? Is it across your supply chain? Is it the wages, coffee prices? How are you kind of thinking about inflationary pressures, how you want to mitigate those, Kevin?
Yeah, well, first of all, I think as we're seeing across the market, everyone's dealing with some inflationary pressures. For us, part of this is we want to continue to increase our investment in our Starbucks partners who proudly wear the green apron. And this is through wage and the total compensation package that we have for them, wage and benefits. And we made a very positive step forward as we entered this fiscal year. We're going to continue to make investments in our partners. And so that's number one. That's a key investment that I think of, and we know that we make that investment, our partners rise to the occasion and they create that great experience for our customers. And so that's a good thing to invest in. There's some inflationary pressures on the supply chain side, but not as it relates to green coffee, simply because, when you think about the way we buy green coffee, we purchase our green coffee 12 to 18 months in advance. And so right now we're price locked for more than 14 months going forward. So we've basically purchased and price locked the green coffee we need for the rest of this fiscal year and most of fiscal year 22. And I think we're one of the few buyers that buys that far in advance. We warehouse that coffee and we do everything we can to take care of farmers so that when there is a spike in the C price, as we're seeing happening now due to some of the weather in Brazil, we can sit back and not be forced to buy green coffee at this particular time, wait till the price is more reasonable. And that gives us some assurance that we can navigate the C price and that element of inflation. But there'll be some other pockets in supply chain where some of our suppliers, they too will be increasing wages and some other areas. But I think it's all manageable. In fact, we can use a combination of price, but also operational efficiencies in our stores to offset that. And even with the inflationary pressures we saw this last quarter, we expanded operating margin. So, I think this is something that we have well in hand and we know how to navigate. And I don't foresee that being an issue for us going forward.
So you're not too worried that we're going to see higher prices as consumers at Starbucks, sounds like.
Well, we use price. We've had a pricing strategy, and we're very cautious in how we use price and very strategic. And we're going to stick to that strategy going forward. And I think that has served us well. But we have other areas in addition to price to offset any inflationary pressures that we might be feeling.
Let me talk to you about labor, because kind of broadly out there, we've seen a lot of companies kind of in the restaurant sector, if you will, kind of raising wages, giving signing bonuses to kind of bring people in, because it's certainly been hard for them to attract talent. I want to go back to this time last year when we were talking, you were honoring benefits, paying wages, increasing wages for those who were working and whatnot. You really kind of talked about making this investment in your people at the time. Did that investment pay off, Kevin? And how are you thinking about the talent that you have been able to retain and attract?
Yeah, Julia, if you recall through the pandemic, we made the decision to give our partners economic certainty. And that meant we paid them whether they came to work or not. And we avoided any involuntary layoffs or furloughs. And in many ways, that built trust with our partners. And in turn, they have risen to the occasion. And so, the big part of the reason this is a record quarter is because of those partners and how, how they've responded as customer traffic has increased in our stores. And so, we're very grateful for the role that our Green Apron partners play, and we built trust with them over this last year. And so, as a result, we've been doing just fine having enough staffing in our stores. There's pockets where we have to continue to hire. We have had to make investments to help some of our suppliers ensure that they're hiring the talent and the staffing they need to keep up with demand for things like breakfast sandwiches and some of the things in our pastry case.
Mm-hmm. And I also know you as someone who looks closely at the data. I would also kind of go back to last year. You all were the first to, require masks in the stores because you were following the virus so closely. What are you seeing as it relates to the Delta variant? Do you see a scenario where folks might have to start masking up again? Curious what the data is showing you.
Yeah, well, Julia, we've got the three principles that have guided us through this entire pandemic have led us to create the store protocols that allow us to dial up or dial back the safety protocols as this virus is mitigated and contained. And the good news is we have a solution for all of this. It's called vaccinations. And so, as more people get vaccinated, we've seen customer mobility increase. And, certainly with the Delta variant, there's questions about the safety of having everyone wear masks indoors. And in states and cities that they mandate that, we will follow that. I think certainly we take the lead from the CDC and what local health officials prescribe. I think wearing masks that shouldn't impact the growth that we're seeing and the trajectory that we're on. In fact, I even had the team look at at certain geographies where the Delta variant was spreading more rapidly and where vaccination rates were lower. And even in those geographies in the U.S., their same-store comparable numbers were at or above the national average. So I don't see the spread of Delta variant or other things impacting our business. We may and we will follow local guidelines on masks, and we'll adapt, and we know how to do that. And that's part of the muscle we've built here over the last 18 months as we've navigated the pandemic.
Mm-hmm. And let me bring up China with you because you all have now surpassed 5,000 stores in China, certainly plans to continue opening there. Just kind of noticing, though, the comparable store sales they increased 19%, driven by 30% increase in transactions, but partially offset by a 9% decline in average ticket. You also did issue some guidance there for comparable sales growth of 18 to 20%, which is lower than the previous guidance of 27 to 32%. Help us contextualize China and that market for you all and the importance there.
Yeah, look, the overall market in China grew 23% over a 2-year period, and same-store comps in China grew 19%. So they accelerated over prior quarter. And the reason you see ticket coming down slightly is because there's fewer group orders. As customer mobility increases and more customers are visiting the store, there's fewer group orders. And so you see ticket moderate a bit as transactions increase. When we look at the 2-year comp in China even accelerated. And that's recognizing, too, that, with international travel restrictions in China, some of the stores that we have in airports, especially in the international terminals, are closed. They're still in the comp base, and those will actually, they'll do just fine once we reinstitute international travel in China. And then in some of the cities where they've had to do quarantine so they could test citizens in those cities, we've closed stores for a few days in there. But even with that, we saw acceleration in same-store comparable, and our 2-year comp numbers look good. So we're feeling good about that. Most importantly, though, Julia, we opened over 125 or so net new stores in China this last quarter, and they are performing at higher AUV and profitability than prior generations. So the brand is strong in China, and we continue to be very bullish on the long term.
Well, Kevin Johnson, CEO of Starbucks, thank you always for stopping by. We'll see you next quarter.